What are the three words that make insurance adjusters nervous? Arbitrary and capricious. Write those in your appeal letter, and you've just signaled to the insurance company that you know their denial can be challenged in federal court. Most people never use them. Most people lose their appeals because of that. This video is going to fix that. And everything here is for educational purposes only, not legal or financial advice. Here's what's actually happening when your claim gets denied. The insurance company sends you a letter. It's dense. It's full of policy language. And buried in there is a reason for denial that sounds final, sounds official, sounds like the last word. It isn't. About 63% of denied insurance claims are never appealed. 63. That number comes from studies tracking health insurance alone, and the pattern holds across homeowners, disability, and life insurance claims. The insurance company knows that statistic. They're counting on it. Now here's what that costs you. The average denied health insurance claim in the United States is worth about $10,800. For disability claims, some people are looking at years of monthly income. Gone. Because they didn't know what to write. The system that governs most of this, at least for employer-sponsored health plans, is a federal law called ERISA, the Employee Retirement Income Security Act of 1974. Under ERISA, your insurer has to tell you why they denied your claim. They have to give you the right to appeal. And if they don't follow those rules correctly, that's a legal exposure point for them. Most policyholders have no idea that law even exists. The insurance company is absolutely counting on that too. So, let's get into the actual mechanics. The three words, what they trigger legally, and the full paper trail that forces a reversal. Point 1. Arbitrary and capricious. Those three words are a legal standard of review under ERISA. When you use them in your appeal letter, you are not just complaining. You are invoking the legal framework a federal court uses to evaluate whether the insurer's denial was legitimate. Here's what that means in practice. Under ERISA, if your plan gives the insurer discretionary authority to interpret the plan, a court reviews their decision under the arbitrary and capricious standard. That means the court asks, did the insurer have a reasonable basis for this denial? Was it consistent? Was it supported by the evidence in the claim file? The moment you use that phrase in your appeal, you're communicating that you understand the standard they'll be judged by. You're signaling that you're building a record for potential litigation. Insurance adjusters are trained to recognize that signal. Now here's the counterintuitive angle. Some states have actually moved to strip that discretionary authority from insurers. California, for example, enacted regulations that require de novo review of insurance denials, meaning a court looks at the claim fresh, without deference to the insurer's interpretation. If you're in a state-regulated plan, not an ERISA employer plan, your leverage may actually be stronger. Knowing which standard applies to your plan is the first move you make before you write a single word. So, how do you apply this? In your appeal letter, after you lay out your factual argument, you write a closing paragraph. Something like, the denial as issued appears to lack a reasonable basis in the plan documents or clinical evidence provided, and may be subject to challenge as arbitrary and capricious under applicable law. That's the version that gets read differently by the adjuster's supervisor and by their legal team. Has your insurance claim ever been denied without a clear explanation? Drop what type of claim it was in the comments. I read every one, and the answers shape what we cover next. Point 2. The paper trail. This is where most appeals fail, even when people know the right language. They write the letter without building the evidentiary record that makes the letter credible. Think of it this way. Your appeal letter is the argument, but the attachments are the case. The letter without the attachments is a complaint. The letter with the right attachments is a legal record. Here's what that record needs to contain. First, you request your complete claim file. Under ERISA, you are legally entitled to this. The insurer must provide every document they use to make their decision, including internal notes and any guidance they relied on. You request this in writing. You keep a copy of that request with a date on it. That request is now part of your record. Second, you get an independent medical opinion or independent contractor estimate, whatever applies to your claim type. If it's a health claim, you find a physician in the same specialty as the treating doctor, and you get a written opinion supporting medical necessity. If it's a property claim, you get a licensed contractor's written estimate. This matters because the insurer's denial often relies on their own reviewer's opinion. You are now directly contradicting that opinion with independent expertise. Third, you document every communication. Every phone call gets a follow-up email. You write, "I'm following up on our call today at 2 p.m., during which you stated." That email becomes part of the record. The adjuster knows it. This changes what they say to you. Fourth, you cite the specific policy language. Find the exact section they used to deny you, and find the language in that same policy that supports your claim. Insurance policies are deliberately vague in places. Ambiguity in a policy is supposed to be interpreted in favor of the policyholder under a legal doctrine called contra proferentem. You don't need to use that Latin phrase in your letter, but you do need to say, "To the extent this provision is ambiguous, controlling law requires that ambiguity be resolved in favor of the insured." That sentence alone has changed outcomes. Now here's the original connection most people don't make. The paper trail isn't just about winning the appeal. It's about changing the insurer's internal calculation. Insurance companies maintain what are called loss reserves, internal financial estimates of what a claim might ultimately cost them, including litigation. The moment your appeal looks like pre-litigation documentation, their legal department has to update that reserve estimate upward. That changes the economics of fighting you versus settling with you. You are not just writing a letter. You are shifting the financial calculus inside their organization. If you've gotten this far and you want to know more about how insurance companies make these internal decisions and how to use that knowledge, that's exactly what we break down on this channel every week. Subscribe, and you won't miss it. Point 3. The escalation ladder. Your internal appeal is not your last move. Most people don't know there's a whole escalation path above it, and the insurance company is counting on that too. After you exhaust internal appeals, and under ERISA you're required to do that before going to federal court, you have external options. For health insurance, the Affordable Care Act gave consumers the right to an external review by an independent review organization, an IRO. This is a federally mandated process. You request it in writing within 4 months of the final internal denial. The IRO is not paid by the insurance company. Their decision is binding on the insurer, and the approval rate for external reviews, meaning the consumer winning, runs at roughly 40 to 60% in most states, depending on the claim type. For state-regulated plans, every state has an insurance commissioner. Filing a complaint with your state insurance commissioner does 2 things. 1, it creates a regulatory record. 2, it triggers a mandatory response from the insurer. Insurers track their complaint ratios with state regulators. A high complaint ratio affects their ability to operate in that state. They know this. Filing that complaint, even if you're simultaneously pursuing the external review, puts pressure on them through a completely separate channel. Here's the specific application. Say you're a homeowner in Florida whose hurricane damage claim got denied because the adjuster called it pre-existing deterioration. You appeal internally, using the language we've covered. You get your own contractor's written assessment directly contradicting that finding. You document every phone call. You file the internal appeal with contra proferentem cited. If they deny again, you file a complaint with the Florida Department of Financial Services and you request external review simultaneously. You are now fighting on 3 fronts. Most insurers will settle a claim like that rather than absorb the regulatory exposure and the litigation risk together. And one more mechanism that most people skip entirely. The bad faith statute. Most states have a bad faith insurance law that allows a policyholder to sue an insurer not just for the claim value, but for consequential damages, and sometimes punitive damages, if the insurer acted in bad faith in handling the claim. In California, that's codified under Insurance Code, Section 332 and related case law. In Texas, it falls under the Texas Insurance Code, Chapters 541 and 542. You don't file a bad faith lawsuit lightly, but you mention it in your appeal record. You write, "This company's handling of this claim may implicate applicable bad faith statutes in this jurisdiction." That sentence goes to their legal team, and their legal team talks to the claims department. Here's our actual take on this, not experts say. Insurance companies have a structural incentive to deny first and hope you go away. The appeal process is not a courtesy they're offering. It's a legal obligation they're required to provide. The paper trail we've described turns their own required process into a mechanism that works for you. The system is designed to make you feel like the denial is the end. It's actually the starting line. Next on the channel, the specific policy exclusions that insurers add in fine print that void most claims before you even file. It's already up, and it's worth watching before you need it. And one more question for you before you go. Have you ever actually appealed a denial and won? Drop it in the comments. Those stories matter because they show people this process actually works.